Paramount lost the initial round of bids and to Netflix, and then came out with a public hostile offer, but it was the same offer that the board had already rejected, essentially. So we're all essentially waiting for them to review it again, and then essentially say, oh, yeah, you know what? We actually did like the Netflix bid more, and that'll toss the ball back into Paramount's court. And I think they're going to have to come back with a better offer, more money, something in the way of addressing the concerns about financing that Warner Brothers board has had all along.
Does Paramount Skydance have that money? I mean, Larry Ellison's worth $240 billion.
Yeah.
$219 billion of that is tied up in Oracle stock.
Yeah. Well, I think there's questions that have not been addressed, even though the Ellisons have said one way or another, oh, we actually did address all these concerns about the financing. Initially there was money from Tencent, which caused some concern. That was taken out, you remember? So there have been adjustments made, but I think at this point it's officially going to go back to them again, and they'll probably have to come up with something more, whether it's more money or whatever, addressing those concerns that remain.
I lost track in terms of, Felix, the Paramount Skydance deal, because it was Jared Kushner's investment firm, and there was, I think, some Saudi investors. And help me understand, because it feels like I thought that was a lot of the financial offer.
Like it was diversified.
It was a lot more diversified, and I felt like
of money to come in.
Well, they were ponying up, it felt like, a lot of money, but I'm not quite so sure, because if Larry Ellison is still so important to this offer, is it a much smaller portion?
It was, they've made adjustments. So it's like, I think what the Warner Brothers Discovery Board is saying is they want more assurance that it's from Larry Ellison, that money feels, better from a regulatory perspective if you can get the money from the Ellison family versus these other sources that have been part of the financing deal from the beginning, such as the Middle East, Middle East money, money that from Tencent, like I said, that was taken out, Jared Kushner, which again might help with the White House, but might raise other concerns.
Yeah, I'm glad you brought that up, because Carol brought up just a few weeks ago what happened when Rupert Murdoch wanted to buy Fox, and what a challenge it was for him to do that because of foreign ownership of a broadcast network and the hoops that he had to jump through in order to do that. Okay, so I still have a lot of questions and unanswerable at this point about what this deal looks like. Let's just say, for the sake of simplicity, Netflix wins out. Yeah. Netflix actually gets these assets. Netflix gets HBO. You wrote the book on HBO. This is a wild world that we're living in if Netflix actually gets this. What does it mean for consumers? Is this good for us?
Well, Netflix would say, oh, it's going to be great because ultimately it will lower prices. We'll have, we'll be able to be more flexible in terms of bundling.
Does consolidation usually lower prices?
That's a great question.
I'm just asking.
My streaming bill is pretty high.
I'm just asking a rhetorical question.
But I think you've seen a lot of voices in Hollywood raising concern immediately about Netflix winning this deal because it's going to be so much consolidation of power. Now, Netflix has said, well, really you have to look at the broader universe of people's attention. And now people are on TikTok and they're on YouTube and all these other things. But really, in the subscription video on demand world, Netflix is already the market leader. If you add in all of these assets from HBO Max, they're going to have more than 400 million subscribers around the world. They're going to absolutely so utterly dominate the subscription video business that I think people are going to be like, there's going to be no one else to sell to, and that's going to be bad for the business overall, and ultimately it'll cost consumers more money down the line.
Yeah, that feels about right. Hey, why is this so difficult to get this done? Why is this one so difficult?
Well, people trying to, make these assets, more valuable from Warner Brothers Discovery for 20 years. You're going back to AOL Time Warner, which again was around the 2000s. Yeah. So, and then AT&T made a run at trying to make these assets work for them. Then you had Discovery come in. It's a challenge that has enticed so many different people and yet has always proven more difficult in reality than on paper for, decades now.
What's the risk that somebody overpays? ultimately. Like, I feel like there's been so much in terms of media assets, and we know the media landscape, you know better than most, how it continues to change and evolve. So I'm just curious.
Well, I think the idea is, like, you have the biggest library, you have the most selection for your viewers. It's going to drive subscribers. People are going to engage with it. You're going to, have more subscribers coming in. But the problem is always, how do you arrange those assets? How do you arrange those shows and movies on a small app in a way that's enticing and available? I mean, I think the problem that Discovery has had with Warner Brothers Discovery is that, piling in all these reality shows into HBO Max didn't actually increase engagement at all. In fact, it just kind of, like, a lot of those shows and programs just get lost in the mix, and no one watches them. So that's the problem, is you end up paying for a bunch of things that don't actually drive engagement.
Well, here's this: Jared Kushner's Affinity withdrawing from the Warner Brothers takeover battle.
Yeah. Okay. I mean, again, that would make sense. It would lower some of the concerns from state attorney generals, anyone that, like, is worried about what Paramount and Ellison's would do with things like CNN. If they
so that makes Paramount Skydance's offer more attractive to Warner Brothers Discovery?
I think it makes it simpler and thus a little bit more attractive in terms of, again, if you're willing to if Larry Ellison will just put up the money and backs up this whole thing, that's the easiest way for them.
Have you seen Oracle's share price lately?
But so much of his wealth is tied up in Oracle.
With Oracle.
He only has $20 billion only, but he has basically 18, according to the Bloomberg Billionaires Index, basically $18 billion worth of net worth that is not tied up.
Wait, so go back to this headline that just crossed: Jared Kushner's Affinity withdrawing from the Warner Brothers takeover battle. That, you say, makes the Paramount Skydance potentially more attractive?
From the Warner Brothers Discovery Board's perspective, potentially. Although at the same time, it's a two-edged sword, because then it's also, will that make it harder for the regulatory approval down the line in terms of getting approval from, the Department of Justice in Trump's White House? Will they, without the son-in-law involved, does that make it harder? I mean, I think there's a lot of questions on both sides of this, and it's going to continue to play out in the weeks ahead.
Okay, so one question that we have is about the global linear networks, because Netflix's deal does not include CNN, TNT, Cartoon Network. I mean, the list certainly goes on when it comes to these assets that not that many people really want right now.
Yeah.
What's the fate of those if Netflix wins this bid?
Well, they'll be spun off into a separate company before the acquisition takes place.
Like a publicly traded company, separate public company?
Publicly traded company, Discovery, probably called Discovery Global. That's the plan at this point. Those assets are still throwing off profits, but the viewership is declining across the board. There's a lot of other cable networks out there, right? Comcast is in the process of just spinning off a bunch of its traditional cable assets. So, at some point, does somebody come along and roll all of those assets into one company? There's probably some, synergies if you combine them all in one place. But it's managing a declining asset over time.